Equity News on Equity Access, your cross-section of the stock markets and of developments in the Zimbabwean economy. A beautiful evening it is to you. Ibn Abunda signing in. Let's get on to business. Before we get into today's news, we're just going to have a recap of the stories that we did capture during the course of the week. On Monday, Parliamentary Committee on Public Accounts convened with Central Bank Governor Dr. John Mangunjuka being quizzed on the operations of the central bank, particularly with the monetary policy pronouncements that have eroded pensioners' funds. Well, Dr. Mangunjuka in his response said that a task force had been set up to look into the sector, also urging players in the field to also invest in inflation-linked products. Well, on Tuesday, Parliamentary Committee on Land and Agriculture set up, also convened with the Tobacco Industry and Marketing Board being quizzed on its level of preparedness ahead of the tobacco selling season set to commence on the 28th of March. On Wednesday, ZESA calling for increased tariffs, calling the prevailing tariffs subprime, as well as possibly could lead to insolvency of the corporation in light of the monetary policy pronouncements by the Central Bank Governor, Dr. John Mangunjuka. As well, economic review by the Central Bank highlighting the performance of the economy in as far as the month of December is concerned. Money supply growing 2%, while Zimbabwe begins to reflect a growth in terms of the foreign currency reserves. Although there was a slight dip from the November figure, the December figure came up to $393,000 from $399,000 recorded in the month of November. On Thursday, gold reports indicating an increase in our gold deliveries to 2.1 tons, but remaining below last year's average of 2.7 tons per month. Then also Equity Access team engaged the Deputy Minister of Infrastructure and Transport, and then the Deputy Minister indicating his optimism with regards to major reforms at the embattled Air Zimbabwe in light of the new aircraft that the corporation is set to receive. As well, he expressed that there has been an extension of the contract between NRZ and South African giant Transnet in a major move to keep or to bring back the NRZ corporation back on its feet. Then, of course, we had two companies releasing their financials yesterday. Insco there recording revenue of $490 million against profit after tax of $192 million. In as far as the revenue is concerned, that's a 61% growth. As well, Net Foods also recording a 40% revenue growth to $280 million, as well as profit after tax of $17 million, up from $9 million in the previous comparative period, which is actually a 77% growth. Then moving on to today's news, the India Exim Bank has called upon Zimbabwe to adjust its policies in line with the mantra Zimbabwe is open for business. Addressing captains of industry as well as leaders from the government, the regional manager for Exim Bank, Mr. Lamba, urged Zimbabwe to formulate strategies that are progressive. He also discouraged what seemed to be political discord, calling for unison so as to create a conducive environment for foreign direct investment. Our Equity Access team was on the ground. Let's have a listen.
It should get reflected in your policy, in your steps, what actually you are doing with your policies. I'm not very sure whether we have put one step forward or two steps backward, or we neutralize that. In the inaugural session, one point was mentioned in the morning that we should stop fighting with each other and we should go for growth. Even that line is very scary for investors. Means we should stop fighting each other. This doesn't need to be mentioned because we should move forward from this situation. We are still at that position. That is the base, or I will say below base if something is there.
Meanwhile, Zimbabwe is grappling with a debt of over $18 billion, with $10 billion of that being local debt, as well as the balance being foreign debt. Mr. Lamba said the India Exim Bank has in the past extended credit of about $220 million, with the greater part of that being extended towards the energy sector. He then also said that the Exim Bank is also considering extending credit of up to $300 million to Zimbabwe. Let's have a listen.
To Zimbabwe, we have given approximately around 150-160 million of government-to-government line of credit, mainly in energy sector. We had also given two buyer's credit and a national export insurance account amounting to approximately $60 million. As of now, we don't have any commercial exposure, as I mentioned. So there are definitely immense opportunity. Considering our overall exposure to Africa, which is more than $10 billion, this is very small, and we have been mentioning that to the government of Zimbabwe that they can ask for the line of credit. One of approximately $300 million is under consideration for Kabangi power project. To Zimbabwe, we have given approximately around 150-160 million of government-to-government line of credit, mainly in energy sector. We had also given two buyer's credit and a national export insurance account amounting to approximately $60 million. As of now, we don't have any commercial exposure, as I mentioned. So there are definitely immense opportunity. Considering our overall exposure to Africa, which is more than $10 billion, this is very small, and we have been mentioning that to the government of Zimbabwe that they can ask for the line of credit. One of approximately $300 million is under consideration for Kabangi power project.
In other news, Zimstats today released inflation figures for the month of February. Well, recorded there is an inflation figure of 59.39%, up from 56.9% recorded in the previous month. Let's get into the exact figures. If to talk about in October, when there was a monetary policy statement issued which separated FCA Nostro accounts from the RTGS balances, we recorded an inflation rate of 5% for the month of October, going up to 25% in the month of November, December 31%, January 56.9%, and now February 59.4%. There are signs that the inflation is beginning to grow at a slower rate. You're recording a growth of 1.67% on a month-to-month basis. Well, as we make progress onto other news, Truworths, Zimbabwe releasing its half-year results for the half-year ended 31 December 2019. Well, Truworths runs several brands across the country, which are Truworths, Topics, as well as Number One stores. A quick breakdown would reveal that Truworths has 16 stores under it, Topics 27 stores across the country, with Number One stores coming up to 20. Well, onto their financials, their revenue scaled 18% to $10 million, while profit after tax scaled 175% to $1.5 million. Well, the major contributors of the revenue was Topics, which contributed 46.6%, while the Truworths brand or Truworths stores contributed 39.5%, with Numbers stores taking in 14%. As we make progress, I'm joined in studio for a conversation on these and other issues by our resident investment analyst, Analyst. Good evening, Analyst, and welcome to the show.
Thank you, Ewan. How are you doing today?
Well, won't complain. Should only get better yourself.
I'm all right today.
Beautiful. Let's get on to the chase.
Mm-hmm.
Well, Lamba there, the Exim Bank regional manager, saying that, well, they've extended credit worth about $220 million before, and there's a possibility of Zimbabwe actually getting $300 million to Zimbabwe. What do you think would be the significance of that? Do you think it's a good offer?
Well, it is a good offer, but then it's still a consideration. I'll say, Mr. Lambert, pretty much outlined every other issue that is there that needs to be ironed out. Whether we get 300 million or we don't, if we don't iron out some of the issues that he mentioned, we won't have any progressive nature within the country. So if we don't really look at how we're going to use that $300 million, where we're going to put it, which productive sectors are going to be encouraged, how are they going to make sure that they tame inflation, how are they going to make sure that they're going to have a very good foreign currency reserve and the like. Those things are things that they need to really look at. Regardless of us getting credit, we still need to make sure that our economic fundamentals are pretty much in order and in check.
Okay, moving on to perhaps what then becomes our next story would be the inflation figures, which are out, and we've got 59.4% recorded in the month of February.
Yes, it's something that a couple of our seniors, government seniors, would like to smile upon, because they did experience a 1.67% growth, which is pretty much slower than what we did in the previous month, which was about a 10.75% growth on a month-on-month basis. On a cumulative and average rate for the past 4 months, I would say there was a growth rate of around about 9 to 10% thereabout. So you'd find that if we have done 1.67% to someone who wouldn't really look really deep into the issue, they would begin to think that we're beginning to slow down in terms of inflation, and we may enjoy better rates of inflation in later days. What we don't realize as laymen is that we
hold on a minute. So I need this to be clarified for the sake of our viewers, that inflation has grown from 56 to 59%.
Yes.
Honorable Minister Professor Mthuli Ncube, on his official Twitter account, actually issued a statement just a few minutes ago where he says, if you could just spec that for me, thank you. He says monthly inflation in Zimbabwe falls dramatically to 1.7% in February 2019 compared to 10.8% recorded in January 2019. And then he says, as projected in the economic reform program, the transitional stabilization program, monthly inflation should continue on a downward trajectory as reforms kick in. Juxtapose that to what Equity Access just said. It says Zimbabwe inflation went up 59.4% in February from 56.9% in January, its lowest gain in 4 months and a successive 9 months gain. Now here's the big one. Equity Access says we expect inflation to spike by a double-digit margin in March. Well, why the disparity? Can you explain what actually is going on here?
As I was going to explain before you cut me off, Muthuli's excitement doesn't take in the fact that the MPS effects have not yet been felt within the economy. Now, why do I say this? Inflation stats are taken by the 15th of every month, and the MPS was presented on the 22nd of February. So that means the difference within those days basically shows us that the devaluation that happened on the 22nd of February by the presentation of the MPS by Dr. John Mangujka had not taken. Yes. Okay. So his excitement around the decline right here of 1.7% is just the slowing down of the growth of inflation, because you did mention that inflation still has grown from 56 to 59. So this trend may continue. Now, going into March, because of the devaluation that happened via the MPS that was presented on the 22nd, it is going to push prices up as retailers and other businesses are going to be adjusting their prices according to the devaluation of the local currency that happened, because such people are going to need to purchase the US dollar that they need for them to keep their shelves filled, and then actually consider making a profit out of it. So they should still be able to purchase the US dollar for them to import, and then still make a profit for them to still remain in business. Now, the MPS effect has not yet been felt. So this is one of the reasons why, as Equity Access, we are saying that the spike may even go up into a double-digit number. Now, there are some zealous people who are also in Mutuli's camp who would want to argue that, the exchange rates had already been affected into prices in the supermarkets and the like. But then we need to realize that the key guys who actually drive the economy, who actually have huge weighting in terms of the CPI, you talk about your Delta, you talk about your Nat Foods, these guys for example, Delta has about 40% of their production inputs that they need to import, of which that cost them about $7 million, of which that $7 million beforehand, they were not getting it. And they can't necessarily go onto the black market and look for $7 million a month. So basically, those guys had to survive with the RBZ's help. Now, the RBZ wasn't pretty much giving them that money, so some of their production numbers had to come off and the like. So now that there's an interbank rate, they can actually formally trade their RTGS dollars into US dollars. So now that devaluation will obviously push their costs up, and then they will then begin to factor in. Talk about your Nat Foods. Nat Foods required about $2 million for them to import wheat. Now, that $2 million with the 2.5 rate that was there as when the MPS was introduced is gonna scale up by 2.5. So that means that cost again has gone up. So these guys are pretty much the key drivers of the economy. Though, I mean, Nat Foods can account for about 60 to 75% of the products on the supermarket shelves currently, because they have a plethora of products that they do sell and produce. So you would notice that such key guys in the economy had not factored in that price adjustment, because they did not have that breathing room in terms of a proper exchange rate where they were being told we were trading at 1:1, yet they were not accessing that foreign currency.
Well, Anis, that's on the one hand. On the other hand, yesterday, remember that with the discussion on the economic review for the month of December from the Reserve Bank of Zimbabwe. Mm-hmm. And what we did note was the fact that there's actually been a growth in terms of the money supply. Mm-hmm. Our money supply growing by 2%.
Yes.
Now, when money supply grows, that spells inflation,
mm-hmm.
penultimately. Mm-hmm. Mm-hmm. So I would go with the view that perhaps we could actually see a continued growth in terms of the inflation.
Yes, definitely, because if we see money supply going up, that means there's some sort of level of borrowing that the government is doing, which is pretty much pushing up our RTGS monies, which then weakens the exchange rate that is on the current market. Already the exchange rate has been weakening. If we look at it right now, from the beginning from the commencement of the new regime in terms of the monetary policy statement, it was pretty much stable.
2.5?
2.5 throughout that first week. And then in the second week, then we started realizing some weakening of the exchange rate. Now, in this current week that we're in, the rate of weakening has actually accelerated versus
quite an interesting week, eh?
Yes. I mean, on a day-on-day basis, we realized a weaker and weaker exchange rate from 2.54 to 2.6 to 2.657 to 2.71, and today 2.75.
Okay, so this is Monday 2.54.
Yes.
And then 2.75. This is Friday.
This is today on Friday. So you realize that without fiscal consolidation, these guys are going to be pushed to keep on borrowing and pushing the money supply up, which then eventually pushes our inflation up.
Affirmative, and so we need to make sure that our government expenditure is actually contained.
Yes.
Because when we then do not have containment in terms of our expenditure, resultantly we're going to have
to borrow.
Yeah.
Because I mean, look at right now, since the liberalization, now ZESA has, you did mention that, and you actually spoke about it in the week, that these guys have been actually coming to a place where they want to lobby for an adjustment in the rates, because some of the electricity that we use is also imported.
Right.
So you do realize that once they still need to import the electricity that we're using in the country, the government cannot afford having industries slow down because of a lack of electricity. While ZESA is going to be crying foul that no, our prices are not in good range for us to actually still supply good enough electricity for most companies. I mean, look at Sable Chemicals is one company that could have been pushing this economy way faster than it is right now. But then these guys are not getting the right pricing in terms of the electricity that they're getting now. Imagine with the 2.5 rate that was introduced, which is actually weakening, that's going to push a lot of costings for those guys. So it's never going to be a rosy day from Tuli, as he's pretty much getting excited that we're having a slowed down inflation rate. But year on year, 56 to 59, that's a growth.
I mean, so to explore another leg of this particular conversation, what perhaps would be the significance on inflation of liberalizing the importation of fuel on the part of corporates?
It's catastrophic, my friend. It is catastrophic. Why am I saying this? Because now your mining sector, your farming, your productive sectors, they have the impetus for them to actually import their own fuel now. Beforehand, they were enjoying a rebate where they could get the fuel at a 1:1 rate and the like. But then now that is all gone. We've got a liberalized exchange rate, 2.5 rate. Now these guys need the US dollar for them to actually.
Now we're at 2.74 for the record.
Oh yes, thank you for the correction. 2.75 actually. Now with that kind of rate, which is probably going to keep on weakening, I'm going to get into that a little bit later. We are expecting for the operational cost for most of these productive sectors to actually go up. For every company actually that is going to be importing their fuel on the foreign market, because that rate is weakening and our local money is being devalued, making it more expensive for them to acquire US dollars. So they need to adjust their prices again for them to actually be able to acquire enough US dollar for them to import enough fuel. Now, which monies are they going to be using? Probably they're going to be using the receipts that they're going to be getting from their exports, which will have that 30-day moratorium. Now, that 30-day moratorium may come in handy because of that fuel rebate issue that has been sort of changed.
But also perhaps to show another side to this subject as well, is that while inflation is actually negative for the country, but there are also positives that can be drawn from there, because there are a lot of things that were camouflaged by the regime of policies that we had in the past. But now that they have sort of been stripped off, we are getting to be in a position where we've got objectivity. So a corporation actually gets to know where it is that they actually stand. And in terms of even the pricing of their products, there is clarity. It's unlike where we had, supposed parity between the US dollar and the then surrogate currency, the bond. Now we've got a currency, a fractional currency, and so now we can get to price products against the foreign currencies, and we then get an understanding of where it is that we actually are at.
Yes, but then that's a very good point right there. But then I before we just close off this very juicy subject, I'm just gonna answer a couple of questions as to the concerns. Well, we did speak about a 2% increase in money supply.
In terms of money supply, yes.
Now, you earlier did mention in the week that there has been a growth in terms of our forex reserves to about 399,000.
Actually, for November, all along from January to
we
October,
had nothing.
November we had $399 US dollars. Then there's a slight dip for December to 393, but that's just marginal.
Yes, but then that marginal increase, someone can then actually argue saying that our money supply could have gone up because of that. Now, but then we also need to really interrogate that area now, because if money supply is going up by that, why then is our debt going up? Now, this and the debt factor that is going up, this is not the interest aspect.
Yeah, because November 9.8 billion.
Now we are sitting at about 10.07. This is local debt.
Yeah.
So we are talking about a government that is still borrowing, which shows that these guys have no fiscal consolidation that they've been preaching and talking about.
But the minister has been so bold so as to express that we've actually recorded $100 million in
Why are we borrowing? Why are we borrowing? That's my question. If we are not borrowing, then we could start talking about a slimming down of the gap between the budget. I mean, they're talking about a 5% budget deficit. Last year we did about a 13%. 13%. Yeah. I mean, that's a huge gap to close. And currently, they seem to still be borrowing. If they continue borrowing, money supply is still going to go up, and that's too much money, too few goods. Inflation is going to keep on going. And no matter how slow it is going to go, it is still going to be a growth.
Okay, and so it would be interesting to see how the story actually plays out. But well, we just have to wait till the next month. At about this time, we'll have the figures for the month of March, and we'll get to make an assessment whether the Professor Mduli Ngube is true or the equity access analysts are actually spot on. But well, take us through the stock markets. I'll be thrilled to find out how the stock markets have actually performed against what you've seen prevalent over the past few days.
All right. Yeah, today was a very damp day. Yesterday was a little bit positive, but no, actually, yesterday we're actually extending on our gains. Wednesday is what I had put in mind. But then, as of today, we did come up about 0.31% for it to settle for the all-share index to settle at about 133.72 points, while the industrials index settled at 445.95. After scaling backwards by 0.32%. Top 10 index is about in the same margins of decline, first in a couple of days, courtesy of your Delta and your Cassava actually coming off, but then being offset by a Padenga increase right there by about 2.75%. Now, the mining's index was stable today, not much activity around that index. So Padenga did offset the decline in Delta and Cassava by coming up 2.75%. So did Econet. Now, you do realize Padenga is still the only counter in the top 10 index that is up 9.51% on a year-to-date basis. Now, basically, Padenga is still very much attractive to a lot of investors because
these guys are into the export market.
Yes, they're into the export market, and also investors are beginning to consolidate into heavy caps again, which is pretty much the reason why Econet has gone up. But then, with a little exception towards your Delta and your Cassava. Now, 5-day trend, our losses have extended in the all-share index, coming off 5.13%, pretty much graphical representation of what happened. 5.15% for industrials index. The mining's index did settle at about 2.56%, which was a little bit of a slim down here there because of the constancy that it has had for the past couple of days. Your top 10 index did slim down a little bit in terms of its losses to about 6.64%. From a loss rate of about 7.4% in the prior session. Now, for our risers and fallers, we had about 6 risers and 6 fallers today. It was pretty much an even party. Ariston, one of my favorite counters on the stock market, adding about 13.33% for it to settle at 3.4 cents. While Padenga, Econet, were trailing that by adding 4%, 2.75%, and 1.9% in that respective order. Delta was the worst performing counter of the day, coming off 1.96%, while FML was trailing that by a very, very, very small margin there, coming off 1.92% for it to settle at 12.75 cents. Exim and TSL, as well as FMP actually close off that set of laggards.
Talking about TSL, could this be a reflection of perhaps a bit of a negative outlook by the Tobacco Association, because they've spoken about the effect of El Nino on the crop, despite increased
which could probably reduce their earnings in the current season. But then there was also there is some positive news there, where you'd find that the forex retention rate was increased from 35% to 50% for farmers. So you'd find that it could be a positive move in terms of the counter going forward. Now, just to close off our forex market, yes, we did talk about it earlier on, but then just to give a little bit of reflection again, we still do realize that this week has been pretty much a bad week for the interbank rate. It has been weakening from yesterday's 2.71 rate. Now it's at 2.75 times. The Old Mutual implied rate actually did come off today, which is pretty much closer to what the parallel market rate is doing, which is pretty much almost a reflection of what the parallel market rate has been performing. Like, it's just a little bit above the parallel market rate, where you would find that if you're trading in your RTGS dollars, the parallel market rate was actually taking at a rate of about 3.8, yet cash was around about 3.5. So this is pretty much an average rate of how the parallel market has been performing in the past couple of days.
Well, thank you, Analyst. Thank you, viewers, for watching. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. Once again, thank you and have a great weekend.